Audience view. Okay, just making sure before I start. All right, let's go for it. Everything's ready. It's good to go. Good to go. Good to go. Okay. Okay, guys. So for your notebook, what I want you to write down is everything you're gonna want to study. Okay, so it's gonna be obviously in phases, but I want you to. The most important one is phase one. Obviously, the bottom of the pyramid is more important than the top of the pyramid, right? Obviously, psychology and risk management is super important, but what I mean is you have to build up. Okay, you have to build from the ground up. Okay. Now, the basics. See if I can get the pen in here. The basics are going to consist of, you guys already know them, so write them down, right? Raw market movement, market structure, right? The retests, right? When it breaks and retests. The start and end of trends, so spotting when a trend is ending, right? And then when it's reversing. You need to know that and study that. Trend lines and counter trend lines. Okay, write this down. Support and resistance and market formations. Okay, so write that down. I'll give you guys a second. This is what you're going to need to study for the basics, right? If you're struggling in any of these areas, guys, you're not going to have a good trading system or a good trading, you know what I mean, psychology. Okay, you need to have everything in place. Okay, it's a puzzle. Okay, so write that down before I move on to the next one. Okay, give you guys a second. All right, let's move on. Okay, the next thing you're going to need to study after you've already studied these and back tested and studied these a lot, you're going to go on to the next section, right? The next, what you need to study next, okay? Fibonacci. Okay, write that down. You need to study Fibonacci. You need to understand it. You need to study Fib extensions. Okay, that's the next level. After you study Fibonacci, the next thing you're going to study is Fib extensions. Okay, write that down. And the next one is candlestick analysis, which I'm going to go into. Well, I'll go into it a little bit right now. You're basically going to be looking for the reversal patterns that you have on your sheets, right? The candlestick sheets. You're going to look for those reversal patterns at key areas of the market. Okay, so key areas meaning harmonic patterns, double bottoms, triple bottoms, head and shoulders. We'll go into it right now. I'll show some examples. Okay, but that's candlestick analysis, Fibonacci, Fib extensions. Okay, that's phase two, what you need to study after doing the basics. Okay, and then step three is going to be the advanced stuff. Okay, that's going to be the harmonics. Okay, that's going to be the Gartley pattern, the bat pattern, the butterfly, the crab, the deep crab, the cipher, and the shark. Okay, you can write them down. Write them down because you need to study each one separately. All right, to recognize when they're happening. Okay, because the market is random, it's not going to throw you the same pattern over and over again. Okay, so you need to understand each one and how to spot them. Okay, so write that down. I'll give you guys a second. Okay, and last one, psychology and risk management. There's not really much to write down right now, but until the next few slides, I'll go into risk management. Okay, and towards the end, I go into risk management. Psychology, I'll go a little bit into it at the end. Okay, everyone follow me so far? Simple stuff, right? Simple stuff, but this is basically what you're going to want to study. Okay, you want to do it step by step. Okay, because if you're struggling in trading, you're lacking one of these areas. Okay, all right, let's move on. Okay, so the first thing I'm just gonna give you a crash course, okay? A crash course of basically examples of what you need to study, okay, and what to spot. There's a lot of simple stuff in here, but it's gonna help you, okay? So we know that during a downtrend or an uptrend, there's always gonna be lower highs, lower lows, higher lows, right? You need to be able to spot them, okay? Because then Fibonacci is gonna come into play later, but you need to be able to spot this, okay? So let me pull out my drawing tool. See if I can get in here. You need to spot this movement, okay? This waveform movement that happens in the market, okay? A down move, retracement. Down move, retracement, down move, retracement, down move, right? You need to be able to spot these, okay? You need to be able to know basically what a downtrend looks like and an uptrend looks like, okay? So let me erase this. Move on to the next slide. Okay, and same for the uptrend. You need to understand that once a low settles in and it starts making higher lows, right? Let me pull out the pen for this. when the low settles in and it starts making higher highs, higher lows like this, right? That's a higher low. It just spiked and then closed up here, made a higher high, right? Higher low, higher high, right? You keep expecting higher highs until obviously it doesn't break the high, and then it forms a lower high. Okay, but it's very simple stuff, guys. These are just basically uptrend and downtrend. Knowing how to spot them is just looking at how the market actually forms itself, right? So higher lows, higher highs, all that stuff. That's simple stuff. Now let's move on to the next thing. Hold on. It's a pointer. Okay, so right here is a real market example. Okay, so higher highs, higher lows signals an uptrend, right? So let me pull out the pen tool for this. Okay, so the low settled in right here, right? Made a higher low compared to this low, right? And then it started forming a high right here, pulled back, higher low, failed to break this low, breaks the high, right? Breaks the high right here, pulls back, forms a reversal pattern. You see the reversal pattern right there? So let me erase it. You see that reversal pattern right here? Okay, that's an uptrend continuation basically, okay? So even though the market comes back to retest it, it takes off from there, okay? Notice the market keeps making higher highs, higher lows, okay? That's how you know you're still in an uptrend. Now, obviously when these start breaking, right, when these higher lows start breaking like right here, you can start expecting downside. Makes sense, right? You're just looking at the higher lows and the higher highs and the lower highs and all that. When they're forming, you're just looking for them to break. Yeah, very simple stuff, okay? Very simple stuff. So let me move on to the next slide. Okay, basically this will be a quick Forex rundown of what you need to study, okay? So just have your notes, take them, okay? Trust me. I'm simplifying everything for you guys, and I'm not holding any secrets, okay? I don't have no reason to hold any secrets for you guys. Everything is basically, I have a structure for everything. Like every trade I take, every markup I do, I have a structure for it. I always build up, okay? So next slide. Okay, so this is the raw market movement. This is basically a trend, right? So an uptrend, higher high, form a higher low, right? Fails to break the original low, starts trending upwards, breaks the high, comes back, higher low, breaks the high, comes back, higher low, boom. This is a trend reversal right here. So let me pull out the pen tool. This is basically a trend reversal. Why? One of the higher lows in the uptrend, right? It's been in an uptrend. One of these higher lows got broken. What can we expect? A small pullback and then a continuation like this, right? Why? Because it broke below this higher low, right? It broke below it. Now we just wait for a retest if we're going to get a continuation to the downside, right? And then when this low breaks, then for sure you got a downtrend starting, and you can just keep expecting pullbacks and then continuations. Okay. Dr. Profit's asking, how many pairs do you recommend trading? Probably 2 to 3, bro, because you want to basically not confuse yourself, and also just, you don't need to catch all the moves on all the pairs. You only need to catch a few moves on a few pairs, honestly. You don't need to trade that much. You don't need to have that many trades open at once. Okay, so just stick to 1, maybe 2 to 3 pairs max. Okay, and just focus on them week in, week out. Okay, and you'll learn a lot more than just skipping around. Okay, so this is the start of a bullish trend. Okay, why is this a start of a bullish trend? Because this lower high from the downtrend gets broken right here. Okay, and what do we expect when a high gets broken? When a new trend starts, we expect a small pullback, retest, right, and then a trend continuation to the upside. Small pullback, retest near this high, continuation, right? Simple stuff. Now, what happens when the bullish trend is ending? These higher lows start breaking. Okay, so this higher low, when it breaks, that means it's the end of the bullish trend. It's the end of the uptrend. You need to stop buying. You need to stop buying because the trend is turning around. Okay, now you expect this, right? Pullbacks, but continuations to the downside. Okay, everyone follow me so far? Just simple trend following, just basic stuff, right? Basic stuff, but you need to know you need to know how to spot this while you're live in the markets. Okay, you need to understand it. Very clear. Okay, perfect. You need to understand this. Okay, so next slide. Just a quick little rundown, guys, what you need to know. Okay, and then it's the same thing here. Okay, the start of the bearish trend was right here when this higher low broke, right? And we also have a double top type structure. And we have a lower high right here, fails to break the high. We're exhausted. When price finally breaks this higher low, Now we're going into a downtrend, right? There's the retest, right? Look for a formation in there. So let me erase this. What you're going to tend to notice, guys, at the beginning of trends like this, when it breaks this higher low right here and it comes back up to retest, that's where you're going to look for those formations. On the retest right here, you're going to look for double tops, triple tops, head and shoulder types patterns, right? You're going to look for spikes, right? Spike retest, right? Spikes to the retest point and then close below. Okay, those are going to be entries. Okay, so let me erase this, but it's very simple. When a new trend is starting, it'll start making lower highs, for the downtrend. Right here, you'll have some type of formation too. And then finally, the end of the bearish trend is when one of these lower highs breaks. Okay, so down here, obviously, when that breaks, new trend is starting. Right, we're going into a bullish trend. Now we just expect pullback, retest, and then continuation. Makes sense, guys? So everything needs to come together like this, okay? You need to understand the simple stuff first before you go into the complicated stuff, okay? So you know it's in a downtrend when it's making lower highs, lower lows, right? When it keeps breaking lows, comes back up to retest and then continues, right? And those lows keep getting broken where you're still in a downtrend, right? You're still in a downtrend until the moment one of these lower highs, right, the most recent lower high gets broken. Now you start thinking the other way, okay? So simple, okay? So next slide. I'll try to run through slow so I don't rush them. Okay, so this is raw market movement. You guys should know how to do this already, so sorry if the quality is kind of bad. So you have a big down move, you have a retracement, you have a big down move, you have a retracement, you have a big down move. Okay, see how easy it is? They're like lightning bolts, right? See how easy it is to see once you break it down, guys? So stop thinking of the market like candlesticks, or I don't know how you guys think about it, but this is how I see the market. I see the market like this: big moves, retracements, big moves, retracements. You know what I mean? It's a lot easier for me to figure out if this touched the fib level, right? If this touched the Fibonacci, like a 618 or something, right? If I break it down like this, okay? All right, so next slide. Hope that makes sense. Okay, so trend lines, that's going to be the next thing you need to study, okay? So that's one of the things you need to study for the basics. Trend lines, you guys should know how to do trend lines already. I mean, hopefully you guys watched the training already, okay? Candlesticks, yeah, we'll get into candlesticks later, okay? Trend lines, you need to understand that you need to connect two wicks, okay? Two wicks, and you need to remember 1, 2, run it through, right? So when you run it into the future, just catch a high to a lower high, 2 wicks, and then run it into the future, and make sure you have some type of reaction on the third hit, okay? Some type of reaction, okay? That basically tells you it's valid, okay? Yeah, 1, 2, run it through. That's all. That's simple. It's simple to memorize, simple to say, you know what I mean? 1, 2, run it through. 1, 2, 2 points, run it through. Okay, both ways. It works both ways, okay? So same thing for an uptrend. 1, 2, run it through, right? Pick 2 points, run it into the future. We have a third reaction right here, valid trend line. Okay, if it breaks, I'm going to start looking to go short, right? If it stays above, I stay looking to buy. Makes sense? So especially on the higher time frames, this is a daily chart, I believe, audio USD. So if it stayed above this trend line, I'm still buying. If it stayed below, I'm going to look to sell, right? Simple stuff. Not complicated, but you need to study it. Okay, you need to study the simple stuff before you move on. Okay, next thing I want to go over, okay, it's kind of a low quality, hopefully you guys can see it good. It's basically market phases, okay? So this is another thing you guys need to study or understand, okay? So the consolidation phases like this, right? These consolidation phases right here is what you want to avoid, okay? This accumulation phase is what you want to avoid. What you want to catch is these clean up moves, okay? These clean up moves and these clean down moves, okay? So you want to avoid this consolidation. And how do you avoid it? You basically wait until you get momentum to your direction, okay? If you see the market ranging, right, just going to the high, to the low, to the high, to the low, and not breaking it, you need to wait until the breakout happens, okay? And that's when you're going to see those big candles, okay? So if you want to avoid consolidation, avoid trading when you see little tiny candles, okay? When there's a lot of tiny candles, basically the market's just wrapping up, and then it's going to explode, basically. Okay. And a lot of times before it explodes, it'll do a stop hunt before. Okay. So let's say it's about to start an uptrend. It'll consolidate at the bottom, right? Hopefully you can see this. It'll stop hunt right before it rises, hit all the stop losses, right, of anyone who got in early, and then it'll take off to the upside, right? That's why you need to be patient and understand that you need to wait until let me change the color here. You need to wait until the breaks happen, basically, okay? You need to wait till the ranges break, right? In this case, if it's consolidating in this tight range, you need to wait for these breakouts, okay, before you even enter the market, okay? Usually what happens, it'll break the high, come back down and retest and show you a reversal pattern, okay, to the upside, okay? So there's going to be reversal patterns right here. Look, let me erase this. There's going to be a reversal pattern right here on this double bottom, right? You see on this uptrend, on this double bottom, on this right side of this right leg, there's going to be some type of reversal pattern, okay? So you need to study your candlesticks. Okay, there's going to be some type of reversal pattern. The ones I like the most is the dojis, the abandoned dojis, and what are they even called? Hold on, got my chart here somewhere. The abandoned dojis, the evening stars, engulfings. Those are the ones I look for the most. Okay, so the abandoned star or the abandoned baby, I think. Anytime you see those dojis in between two candles, right? So if you see a big or you see a small candle and then a doji and then a huge bearish candle, you know what I mean? It's more likely to go that way. Okay, so maybe I can draw it in here, but I think I have a chart here somewhere. Okay, so just understand that when the market, let me go back. 1 second. You need to try to avoid these consolidation phases. Okay, so you kind of need to wait. You need to be very patient with your trades. Okay, if you're sitting in drawdown for too long, you're probably getting in too early. Okay, so you should only be in drawdown for a little bit. You shouldn't be in drawdown for days. You know what I mean? If you're in drawdown for days, well, then you got in too early. Okay, if you're correct on your trade, of course. Okay, so let me move on to the next one. Okay, so this is consolidation. So this is a real market example. Okay, so if you're trading in here, it's basically hell, right? Because if you're buying up here, it's going to come back down. You're selling down here, you're going to be negative, right? So the best way to avoid this stuff is just to wait until this tight range right here. You see this range right here? Wait for it to break, retest. There's the retest right there. You see those candles? Breaks the high. See these highs? Breaks the high. There's the retest. Look to buy somewhere in here when it breaks out of the range. Make sense? So notice right when it broke the range, small retest, takes off to the upside. Boom. Right? Nice up move right here. Good pips. Okay, and this is GBP on the daily chart, so that's a lot of pips. It's probably like 1,000 pips. Okay? Now, next thing. Next slide. Okay, so the next thing you want to write down in your notes, guys, is you're going to need some type of support and resistance system. Okay, so the one I use, you guys already know, is quarters theory. Okay, quarters theory, you can look it up. There's a book on it. You can buy it. You can look it up. Okay, so it's called quarters theory, and it's basically my support and resistance system. Okay, notice how I'm still on the basics. Right, I'm still on the basics, and we're already treading water. We're already getting, some distance. We're already getting ahead. Right. So you need some type of support and resistance system. Why? To give you targets, to give you areas to look for bounces, breaks, stuff like that. Okay, makes sense? So the one I use is quarters theory. You guys already know. Okay, so write this down. You need everyone already knows, well, most people know that most support and resistance systems, they have some type of set number, like 1,000 pips. Right, so for quarters theory, it's 1,000 pips, right? So you would pick 1.4 and 1.3, right? So that would be probably GBP USD or whatever, right? So 1.3, 1.4, that's 1,000 pips. Put a horizontal line on both of those. Okay, put a horizontal line on both of those, 1.4, 1.3, and then change those colors, right? Those are 1,000 pips. So those are the strongest support and resistance. And then the middle ones, or the smaller ones, the 250 pip increments, are going to be a little bit weaker. Okay, but they're still going to give you targets. Okay, so price tends to move in 250 pip ranges, guys. So write that down. Okay, you need to have some type of support and resistance system. The one I'm using is quarters theory. You can look it up. Okay, there's videos out there. There's the books out there. Okay, this is no secret stuff. Okay, no secrets here. All right, I gotta mute someone. Hold on, guys. All right, sorry about that. Okay, everyone follow me so far? Simple stuff, right? Okay, next slide. Okay, this is an example of quarters theory. Okay, so I don't know if you guys can see it that cleanly, but basically I'm on AUDUSD. Right here, it broke above 0.7 right here. I'm on the daily chart. Okay, broke above, closed above right here, and it came back for a retest, a big wick, right? And it closed all the way up here. That's a big clue that something's going on. Okay, so then it started climbing. It hit 725, which is our next quarter point, closed above. You see with that big bullish bar, it closed above. So what do we expect, right? If it closed at 725, closed above it, right? Using our quarters theory, our support and resistance system, our next target, since this is bullish, right? We have a big bullish close above our quarter point, right? We expect the next quarter point to get hit, okay, which is 7,500, okay? So 72.5, right? 725, add 250 pips. What are you going to have? 7.5, right? So 7,500 is going to be our target, and let's see what happens. Yeah, it might not retest though. You see, when you have those big breaks like this, and it already touched it multiple times. So Deshaun is right, but it might not pull back that much. Okay, so look, it already touched it once, got close to it. When it came up again, didn't break above it. Third hit, finally broke above. We can expect a big continuation. Okay, so let's see how much it pulls back. It did not pull back much. You see, the next bar barely pulled back and then just took off and hit our target, 7,500. Okay, so you guys see basically how it works. Okay, so when price breaks above a quarter point, most likely it's going to come back to retest it, take off, break another quarter point, and then go on to the next one. Okay, especially on the daily chart, when it closes above a quarter point, it's more likely to go to the next one. Okay, but that's my support and resistance system. You guys can have your own, but the way I use mine, it's very simple, and it's not complicated at all, and a lot of people like it, so I like it. I mean, it's very easy for me. Yeah. Okay, so next slide. Okay, so this is just an example of what happens at these quarter points. Okay, it's very easy. I'll show you a real chart right now with it. Okay, but this is an example of quarter points. Okay, quarters theory, right? This is support and resistance. Whatever system you're using, guys, for support and resistance, what you're going to tend to notice is that formations tend to happen right next to them or right on them. Okay, so you're going to have head and shoulders, right? Head and shoulders formations right at a quarter point. You're going to have double top type structures, right? Where it breaks the middle part of the double top and you start selling, right? So these are just examples. Yeah, it's recorded, bro. Don't worry. These quarter points, you're going to see formations near them, okay? So a double top, right? Double top like this. Triple tops, right? Maybe even a break, retest, and then continuation. Okay, but these quarter points are basically going to be your guide. Okay, they're going to be your guide to what's going on. Okay, so if it breaks above, you're expecting more bullish momentum. If it breaks below the quarter point, you're expecting more bearish momentum. Okay, very simple. It's not hard. Okay, so next slide. Hope you're following this. Hope this is helping you guys. Okay, study this. Okay, so I'm going to go into some market formations. Okay, so that's the next step. Okay, for your notes, write them down. Market formations. Okay, so I'm just going to go into double tops and I think head and shoulders. Okay, so a double top, you guys should already know. It's the most simple example I can show you guys. Basically, what happens is this. Okay, the market will be on an uptrend, but it'll get exhausted. Okay, and what tends to happen at the top of uptrends before it reverses is some type of double top or triple top type structure. Okay, so in this case, we have a double top. It breaks, right? It's trending up, but it's already near the end of the trend, right? Pulls back, hits some type of support. This right here, this middle part of the double top, guys, you need to look left. Okay, you need to look left. Whenever you see a double top, you need to look left. Okay, you need to look left because there's going to be some type of structure there. Okay, there's going to be some type of structure when you look left right here. Right, there's going to be a high here, maybe like this, you know what I mean? It'll come down, right? It'll break back up, right? But there's going to be some type of structure here. That gives you a good clue that this, when it does break this area, right? When it breaks this area, you're good to go short. Makes sense? So always look left for structure, okay? Always look left for structure. Okay, so when it comes up to retest the highs, what's going to happen is it's going to fail to break the high, or it's going to break the high and then close back below. Okay, so maybe it'll throw a big wick. It'll mess around right here in this area, right? It's going to mess around and trick people basically to go long and then close all the way down beneath the original high, right? Now, what's going to happen, this area right here on this double top, it's going to show you a reversal pattern. Okay, it's a little bit more risky to trade this reversal pattern on the double top, because it could show you a reversal pattern and then just pull back a little bit and then just break, right? So it's safer. The safest way is to wait for this higher low to break, right? This support area to break before you even sell, right? Before you even think about selling, it's better to wait for a higher low to break, right? So you're at the end of an uptrend, price is slowing down, makes a double top, breaks support, comes up to retest. Right here on this retest, you're also going to get a reversal pattern, right? So remember, guys, I trade H4 and daily mostly. Okay, I use the H4 chart and the daily chart the most. Okay, 1 hour chart just for reference, but I don't use it as much as the 4 hour chart. Okay, so when it breaks this support level, right, the double top, when it breaks the middle part of the M, when it comes up to retest, you need to wait for this retest. Okay, you need to wait for this retest if you're going to short the market. It's usually going to pull back, guys. What you're probably making a mistake, okay, or one of the mistakes you're probably making is selling, right? You got the right direction, but you're selling right here, right? You're selling right here before the pullback retest, and then you get taken out, right? You get your stop loss hit, or you're in heavy drawdown, right, during this pullback. Okay, so what you need to do is wait, support to break on a double top, right? Before you short, before you sell, you need to make sure a higher low gets broken, and then you need to wait for the retest. Okay. What time frame do I look for entry candles on? Mostly the 4 hour chart, bro. 4 hour and daily. Okay. I rather get an entry on the 4 hour chart. Okay. A 1 hour chart, I'd be very, very careful to put an entry on. Okay. Be very, very careful if you go on the 1 hour chart. Yeah, 4 hour chart's the best chart, bro. All around, the 4 hour chart's pretty much the best chart. Okay. All around. The reversal patterns are pretty clean and they're very powerful. Okay, the higher the time frame, the more powerful the candles are. Okay. Now, before I move on from this double top, what I want you to realize, guys, or take notes, is these retests right here. These retests always expect some type of formation as well. Okay, so even these retests might even have a double top on them as well. So you have a double top right here, 4 hour chart, breaks support, comes back up to retest, forms another double top on the 1 hour chart. Right, on the 1 hour chart or 4 hour chart, it forms another one on the double on the retest, right? How do you know? How do you know to short? Well, you're gonna have a counter trend line in here, which we're gonna go into, right? Will that become a new lower low now that support was broken? Yes. Once this support breaks, now that is a new lower low. Structure is breaking to the downside. Now you can expect a pullback lower high compared to this high, right? This will be your high. Now you can expect lower highs to start forming, okay? Especially when that support got broken, when this low gets broken. Okay, that's why I always tell you guys, look left, look left, look left, always look left, okay? There's gonna be something going on, okay? That's gonna give you the clue, okay? I'm telling you, simple stuff helps the most, okay? So okay, I'm gonna move on to the next one, guys. Hopefully, before I move on, let me just say one more thing. These retests, like I told you guys, there's gonna be some type of formation, head and shoulders, okay? Something's gonna happen, and then it's gonna show you a big reversal pattern to the downside, okay? And then it's gonna break your counter trend line. So in here, guys, in here, it's gonna form something like this, okay? The pullbacks, sometimes they'll form this, and then they'll drop, right? And then you'll have a counter trend line in there. So let me change colors here real quick. You'll have a trend line in there somewhere, right? Like that. Super ugly drawing, but you guys get the point. You have a counter trend line in there. I'll probably do one right now when we get in the charts. And then when it breaks the counter trend line, goes in line with your trend, right? New trend. Lows are going to get broken, right? That's when you get in, okay? On the reversal pattern, once you get a break of the counter trend line, okay? After you see something form on the retest, Okay, usually a reversal pattern will form on these retests. Okay, okay, and move on, move on. Let's move on from this. Okay, so this is a real example. Hopefully you guys can see it good. Okay, this is a double top. Okay, so let me pull out the marker. Okay, so price is trending upwards, trending upwards, trending upwards. Finally tops off. We see a pullback, significant pullback. I'm going to look left where it bounces, right? I'm going to look slightly left. I see a lot of structure here. Okay, let me change colors here. I see a lot of structure, okay, in that area. Okay, yellow, it's yellow. Okay, you see where it bounced right here? This, where the middle part of the double top bounced. Look left. My God, so much structure here, right? It's resistance. So when it breaks back above, support, right? Makes sense that it wants to bounce there, okay? So simple. Change colors again. Easier to see, blue, pink. Okay, so it'll make a double top, right? And what do you notice on this double top? What forms right here, guys? Do you guys see that reversal pattern right there? It's an engulfing type pattern, right? Yeah, engulfing, you got it. Okay, so an engulfing, and notice not only did it engulf, notice it actually pushed high first, right? It actually retested the high, right? Failed to break it, closed below with a big wick, even bigger wick than this bullish candle, right? It actually did a bearish wick, right? Closed all the way down here. Okay, that's what you guys need to pay attention to when you're analyzing candlesticks on those higher time frames, like the 4-hour chart. You need to understand that if it doesn't break the high like this and it shows you a big reversal pattern, right? And it already showed you a higher low right here, this double top, right? The middle part of the double top is going to be a higher low, right? So you're just waiting for that to break, right? If you don't short it right here, right, which is a little bit riskier because it can just continue. If you wait for the middle part to break, that's the safest. When it breaks, wait for the small pullback. There's the retest. Notice the retest. What do you see right there on the retest? Another reversal pattern, right? Engulfing. Went all the way up, wicked, and then closed all the way down here, no wick. That's a huge clue, guys. That's a super good reversal pattern, guys. It's a really good candle when you see this, okay? You see a big wick to the top and then no wick on the bottom, bearish. Oh my gosh, sell that, 20 lots, okay? Simple stuff, okay? And then if you're gonna sell it right here, okay, your stop loss, you could put it, you could put it at the high, right? You could put it at the high, your stop loss, but if you want to have it a little bit tighter, I would just put it a little bit above recent lower highs, right? So I'd probably go up a little bit. I'd be like, this is a recent lower high, this is a recent lower high. I'd probably put my stop loss here or here, right? Because if those break, if it breaks back up here, then it's most likely going to keep going. Make sense? So you can have tight stop losses. You just got to know what you're doing, and always just if you're going to put a stop loss here in this situation, you shorted it right here, right? You can just look left to look towards these lower highs, right? You don't have to put it all the way at the top. You can put it a little bit lower, right? Just look for those candles, those lower high candles, right? You see those wicks, right? They're not going to go back there because people are trapped. That's what you need to understand, guys. The wicks means people got trapped there. Traders got trapped there. Okay, so when you see a wick, the damage is already done. Okay, that's why you need to pay attention when you see big wicks. Okay, next slide. Okay, hopefully you see this one good. This is an inverted head and shoulders. Okay, so if you guys don't see it, this is the shoulder, this is the head, right? This is the shoulder, pops off, breaks the neckline. There's a continuation. Okay, for my system, guys, and the way I teach, and the way I'm going to show you guys, basically my new training is going to be like, I'm going to be showing you more examples. It's basically just more detailed, right? It's the same concepts, just more detailed. Now, what you're going to tend to notice, guys, on this these head and shoulder formations, okay, take this for your notes, okay, put this in your notes, draw it in like this, okay, head and shoulders. What you're going to tend to notice for head and shoulders is this right shoulder, right, this right shoulder, let me draw it in again, change color. This right shoulder right here is going to form a reversal pattern, okay? Right here on this right shoulder, there's going to be a reversal pattern right there. Okay, some type of big bullish candle, something's going to tell you that it's going to basically rise. Okay, so right here, there's a little tiny reversal pattern, but it's not clear enough to see what's going on, right? But I bet if you went one time frame higher, there'd probably be some type of engulfing here, right? So makes sense, guys. Like Whenever there's a formation, a double top, a triple top, right, head and shoulders formation, there's always going to be a big reversal pattern on the right side of the formation. Okay, double bottom, right, triple bottom, head and shoulders type. There's going to be some type of formation right here. Pink. There's going to be some type of formation right here. Okay, right here. You need to pay attention to those. Okay, that's what you need to pay attention to. Okay, when spotting market formations, understand there's going to be reversal patterns in there. Okay, so I'm going to move on. It's just very simple stuff. Okay, so the next formation, the next market formation you guys need to know, write them in your notes, is the triangles. Okay, so triangles. I'll give you guys time to write them down. Okay, so triangles. A symmetrical triangle is a triangle that basically has, let me pull out the pen tool. It basically has lower highs and higher lows in it. Okay, so it has a higher low right here, lower high, higher low, lower high, higher low, and then you finally get the breakout, right? But when you do a trend line, 1, 2, run it through, right? How do you do triangles, guys? It's the same thing. All you do is pull out your trend line tools, okay? Your trend line tool, and you just basically do the same thing. You do 1, 2, run it through, right? So 1, 2, run it through, 1, 2, run it through, okay? And when you see triangle formations, it's mostly what tends to happen, guys. The triangles are basically just consolidation. Okay, that's why I tell you guys you need to avoid getting in when you see a triangle, right? Avoid getting in the middle, okay? Because near the end of the triangles, they tend to just do a scatter and then they continue the original direction. Okay, so you need to be careful when you have your triangles. Okay, if you spot a triangle in the market, right, making lower highs and higher lows, right? What does that tell you? You're in consolidation, right? You're not moving anywhere. Market's not moving. So why are you going to get in? You need to wait for a breakout, okay, before getting in. And what you're going to tend to notice is that when it does break, it's probably going to form a reversal pattern. Okay, right here. If I can get in here, it's going to form a reversal pattern right here, break the triangle. It's going to come back and retest. Okay, and even on the retest, you might see a reversal pattern form. Okay, right here or right here on the breakout. Okay, hopefully that makes sense. Okay, but trust me, you're going to spot them. Okay, so that's a symmetrical triangle. Okay, an ascending triangle, guys. It's called an ascending triangle because it's making higher lows. Okay, see these higher lows it's making? Higher lows, higher lows. Okay, but the thing is, this ascending triangle is topped off. Okay, that's why it's called a triangle, obviously, right? It's the shape of a triangle because price topped off right here, right? If I can get a straight line in here. Price basically topped off, right? Fails to break the high, fails to break the high, but keeps forming higher lows. So what does that tell you? It's more likely to keep going up. Why? It's forming higher lows. Makes sense? Where can we get these to print them? I'll put them in the group. I'll probably put them in the group, or yeah, I have to put them in the group. Or you can just search it on Google. Just search ascending triangle, descending triangle, symmetrical triangle. Just search that on Google and there'll be images that you can print out. Okay. So that's an ascending triangle, guys. It's called an ascending triangle, like I said, because it's making higher lows. Okay. The same thing for this. When they break out, when it breaks out, what usually happens is you get a big candle right here, a big reversal pattern or something, right? And then when it pulls back to retest, let's say you get a big 4-hour candle right here that breaks it, right? A big bullish candle right here, a big 4-hour bullish candle. The pullback to retest the top of the triangle, if you go on the 1-hour chart, it's probably going to form a reversal pattern when it bounces. Make sense? It's pretty simple stuff. Whenever you get a break on let's say on a 4-hour or daily, if you go one time frame lower, you're probably going to see a reversal pattern form on the pullback retest. Okay, so everything comes together, guys. Now, a descending triangle is the same thing. It's called a descending triangle because it's making lower highs. Yep, I saw a descending triangle in USD CHF and it dropped hard. Yep. Okay, so you have a descending triangle right here. It's making lower highs, but it keeps hitting this low and not breaking it. Okay, that's what I want you to notice for these triangles, right? For this ascending and descending triangle. The descending one, it's making lower highs, but it keeps repeating this low, right? That's what gives you the clue that something's about to happen. Basically, it's about to break out. Okay, that makes sense. It's about to do a breakout. You need to avoid getting in anywhere in here. Avoid getting in anywhere in here. Avoid getting in anywhere in there. You need to wait until it breaks out, okay, before you start projecting. Okay, whatever direction. Okay, so wait for the break right here for this descending triangle. Wait for the low to break. Wait for the retest, like I've been telling you guys, and then look to short it off of some type of bearish candle. Okay, once it drops below the triangle. Okay, makes sense. Simple stuff. Write them from your notes. Write them for your notes. Okay, I'm gonna pause for a second so you can write them in. And we are still on the basics, guys. This is still the basics. This is barely phase one. Okay, market formations. You need to understand them. Okay, I'm going to move on to the next one. Okay, these are called flags. Okay, bullish flags, bearish flags. Okay, it's basically the same thing as a triangle, guys. The only difference is that it doesn't bottom out. Okay, or it doesn't make how do you say, it doesn't make the lower highs and the higher lows. Okay, what tends to happen is you're going to get something like this. You have an uptrend. So let me pull out my pen tool. So you have an uptrend, right? You have an uptrend like this. It'll pull back, make a low, pull back, make a lower high, make a low again, a new low, lower low, come back, make a lower high, come back down, make a lower low, but it still hasn't broken the original low right here, right? So we're still expecting upside. Then basically you do a trend line, right, on both sides, right? It's so simple. It's called a flag because it looks like a flag on a pole, right? All these trend lines are, guys, or these formations, is basically just alterations on a trend line, right? So you still have to do the same rules. 1, 2, run it through, right? So 1, 2, run it through. 1, 2, run it through, right? Yeah, it's a channel. It's super simple, but the channel is the same thing. They follow the same rules, right? 1, 2, run it through. 1, 2, run it through, right? The only difference is it's basically parallel, right? They're like train tracks, right? That's why it's called a channel, a flag, whatever, right? Whenever you see one of these, wait for a breakout, okay? Wait for it to break above one of the trend lines or below it, okay? Wait for it to break below or above, right? Whatever channel you have, okay? Wait for the breakouts. Like I've been telling you guys, do not get in anywhere in here, right? You can buy it here, but you're going to be more accurate if you wait for breakouts. Like I've been telling you guys, okay? Wait for the breakouts. And when it breaks, it's usually going to have some type of strong or big reversal pattern, okay, or big candle. Okay, you have a big candle here. Big candle. Make sense? Would you wait for it to close above it? Yes. What I usually do is I wait for it to close above the channel, right? And then I wait for a small pullback and then I buy. Okay? And then my stop loss can be tight, right? Right at the bottom of it. Right? If I sell right here when it closes below the channel, stop loss right here at the high. Right? You can just wait for a small pullback before you sell. Okay, you get tighter entries like that if you wait a little bit. Okay, but that's a channel, guys. That's a flag, right? It's called channels, flags, whatever. Pretty similar stuff. Okay, so it's just market formations. Okay, don't trip. The next one is a wedge pattern. Okay, this is probably I think this will be the last market formation, guys, before I wrap this one up and then we move on to the next topic. Okay, this is called a falling wedge, right? This is a falling wedge. But basically, what it is a symmetrical triangle, except that instead of making higher lows and lower highs like this, right, the market's actually trending down. Okay, the market's actually trending down, making lower highs and lower lows, and then it breaks out of it. Okay, and basically, when you put your trend lines on, what you're going to notice, yeah, when there's big, when you, oh man, I tripped out here for a second reading the question. Okay, so you're going to pull out your trend line tool, guys, and then you're going to do, obviously, 1, 2, run it through. What you're going to tend to notice for wedges, the reason they're wedges, guys, is because they get tighter and tighter towards the end, right? Notice they get tighter and tighter towards the end, right? What do you think is going to happen at the end of it? Right? At the end of this wedge, what do you think is going to happen, guys? A breakout, right? What's happening is volume is getting tighter and tighter, tighter and tighter, right? They're tightening the volume, tightening the range of the market, and then boom, it's going to pop, right, eventually, right? Markets can't stay in consolidation forever, so eventually it's going to pop, okay? So this is one of the formations you need to study or need to back test and spot, okay? Wedges. Okay, I'm going to move on to the next one. Jerry said he likes to trade on big red and yellow folders on Newsday, since I know there will be volume. Yep. Smart. Okay, so the next thing you're going to need to study, guys, is Fibonacci. Okay, so write it in your notes. We're almost done, guys. We're almost done. Okay, so the next thing you're going to study is Fibonacci. Okay, and then right here, the one I'm showing you right now is the 618. Obviously, you measure from low to high. Okay, so if you have an uptrend, guys, you're going to measure from low to high. Okay, if you're in a downtrend, you measure from high to low. Okay, I'll repeat it. Uptrend, down, right, low to high. Uptrend, low to high. Downtrend, high to low. Okay? All right, good night. Okay, so this is going to be a real example, guys. This is a real trade I took. I'm on Euro JPY 1 hour chart, but I was looking at it on the 4 hour chart mostly. Okay, but I measured out my fib. Okay, so let me pull out my pen tool. No, I don't use it that often, but I do use it. But the thing is that it's so shallow, I don't really trust it as much as a 38.2. Okay, so for Fibonacci, you need to understand, guys, you can't use it unless you have an obvious move, okay, an obvious up move or down move, right? So check it out. I have an example here, a Fibonacci, right? Just a simple example. I basically saw an ABCD pattern. I was just projecting to the upside, right? And I was using this fib as basically my support, right? I saw the 618 fib right here was acting as a support, right? I measured from this low up to this high with my fib, okay? Why? It was a very easy to see move in the market. Notice it went bullish without even pulling back, right? You need to understand that when you measure fibs out, you measure out the overall moves, okay? Right? You need to measure this move first, right? And this was the move, okay? And before it pulled back, that's the move it made, okay? When it pulls back, all you do is wait for your fib levels to get hit, right? And you wait for it to reject off one of the fib levels. Just a super quick rundown, guys. I saw it reject at the 618 and actually make a higher low right here. So you guys see how that higher low formed, right? It's hard to see, but it formed a low, bounced off the 618. Good, right? It's good. It actually made a head and shoulders type formation if you look. So let me change colors here. It's the same as one of these. Hold on. Okay, so you guys see the head and shoulders, right? We're on an uptrend. What do you expect? Any type of formation to the upside is going to be something like that, right? Inverted head and shoulders. So notice I put this pink box right here that I put. All I said in my head was as long as price stays above this pink box, okay, then I know this is going to be a valid head and shoulders type pattern, right, to the upside. Everyone following me so far? You guys see how the head and shoulders is forming? We're on an uptrend, so you can expect inverted head and shoulders. Okay, so I measured it from low to high, and I got my retracement right here. I got the pullback. I waited for the pullback. Okay, 618 made a higher low on this. When it came back, it made a slightly higher low, and then it started climbing, right? And it broke this counter trend line. Okay, so this is a counter trend line, guys. See that trend line going down? Why is it a counter trend line? We're in an uptrend. It's making lower highs, so I pulled out a trend line, right? But it's going to the downside, right? So when it breaks, it's more likely to keep going up, right? So let's see the next slide. Let's see what happened. Boom, right? Look at that. Just no drawdown in that trade, right? Just all the way. Just shifted quickly, right? This is the 1 hour chart, so that was 1 hour of shift. Okay, so it took off, right? This actually did hit my take profits eventually, but the important thing is that my entry was on the pullback of the up move. Okay, so I expected more uptrend. I got it, right? But what's important to know, yeah, I did move the stop loss. Yeah, after the takeoff, of course, bro, of course. When you see a big candle like that and it shifts in your favor, put your stop loss to break even, pretty much. I put my stop loss to break even after that. Okay, so this is basically what happened, guys. Up move, I measured it, right? Waited for the pullback. When it started pulling back, that's when I measured it, okay? Up move, I pulled out my fib, low to high. I waited, right? I wanted to see how far it pulled back. Pulled back to the 618, came up. I was like, oh, get ready to buy, right? Get ready to buy. Came back down, made a slightly higher low, and then it started breaking up right here. When it broke this previous lower high right here, good to go. You guys see it? When it broke that, my God, good to go, right? Good to go. Broke the lower high, good to go, right? Now we're expecting more upside. Okay, and that's basically what happened. I mean, it's so simple. It's just a lightning bolt pattern. Okay, and that was basically just the 618. Right, the 618 came in there. Make sense? Okay, next slide. That's Fibonacci, guys, and that's just basically one of the ways I use it. It's very important to understand, okay? Very important. Okay, the next thing, guys, I forgot to mention on the previous slide, Fibonacci and Fibonacci extension, okay? So notice I'm using Fibonacci extension right there. Yeah, Chris, I put it right at break even or a little bit above, okay? A little bit above. So you don't lose anything, okay? Basically, it means you don't lose anything if it does get hit. Okay, it's risk free. Okay, but I forgot to mention, guys, Fibonacci and Fibonacci extension. Okay, you need to study those. Okay, so notice that when the high breaks, that's when I started pulling out my extensions. Okay, and that's how I start targeting my next area where it's gonna basically struggle, right? But yeah, those are, you need to write that down, Fibonacci and Fibonacci extensions. Okay, that's one of the things you need to study. Okay, next. Harmonics. You need to study harmonics. Okay, you need to study harmonics. So I don't know if you guys wrote down the patterns, but you need to study them. Okay, you need to know each one. Okay, the only ones that you don't, I wouldn't say you need to know or they're not as important, but I don't see them as often as maybe the bearish 5-0 or the bearish 3 drives. Okay, they're important, but you're not going to see them as often. Okay, they're a little bit harder to spot. So I would just focus on the harmonic patterns first. Okay. And if you're confused, then just do the alternate ABCD pattern is probably the easiest one. Okay, I use the alternate ABCD pattern. I don't use the regular ABCD pattern, okay? The regular ABCD pattern, that's the one I was using in the previous screenshot I showed you, but this one, the ones I use now is the alternate ABCD pattern, okay? Oh yeah, Ralph already knows about those bearish 5-0s. He showed me one that was forming. So yeah, guys, write it down. I'm only showing you this screenshot because I want you to write down the Gartley, the bat. I don't use the alternate bat that much. Bearish Gartley, bearish bat, butterfly, crab, deep crab, shark, cipher, and alternate ABCD pattern. Okay, those are the ones I use the most. Okay, so next slide is the same thing as the bullish ones. Okay, same thing. Just write down the patterns you need to study. Gartley, bat, butterfly, crab, deep crab, cipher, shark, alternate ABCD pattern. Okay, those are just harmonics that you need to know, you need to study them, you need to know how to spot them. Okay, you need to know. Okay, so there's no software out there, guys, that's gonna be as good as the human eye. Okay, I don't care what anybody says. Okay, your human eye is better than any software. Okay, any software does not compete with a good trader. Okay, next slide. Okay, this is gonna be talking a little bit about psychology. Okay, so psychology and risk management. Okay, now psychology, you need to understand, guys, that the market is basically a storm, right? And you're just basically surviving the storm, right? So using risk management, you're going to survive the storm a lot better than most people, right? So let's get into it a little bit. Okay, so risk management, you guys know that the higher volume you trade, the more risk you take on your account, the more chance, right, you have losing, or losing your starting capital, right? So the volume or the risk percentage you take on each trade is basically a tightrope, right, from two buildings. If you're walking on a tightrope from two skyscrapers, right, the lower your risk, the wider the rope, right? But the higher your risk, the tighter the rope, right? So if you make a little mistake and you're doing like 10% or 25% risk on your account, a little mistake, and you're going to lose, right? You're going to lose it, right? You have a smaller room for error the higher risk you do. Okay, so if you want to be able to come back from mistakes, guys, and come back from losses, you're going to want to do is basically super small volume, or as small as you would like to do, basically. You know what I mean? So don't over leverage your account. Do very, very small order sizes. Okay, you can just catch more pips and you'll make the same amount of money. Okay, so don't trip. Okay, I'd rather you take less risk and hold it for longer than do a high risk order and just scalp it. You know what I mean? I'd rather you do it the correct way and try to swing the trade a little bit longer. Okay, and not risk your account. You can build an account really quickly with low volume if you just swing them. Okay, if you just swing for more pips, like 100 pips or more per trade. Okay, so next. Okay, so I'm going to go over risk real quick, guys. Please take notes. Please take notes because this is all I get inboxed, okay? Give you guys a second. Okay, pull out your pen or whatever. Okay, so your risk is going to be whatever percentage compared to your total account is lost on a trade when it hits your stop loss. Okay, so it's very simple, guys. That's all your risk is. It's whatever percentage you lose compared to your total account, right, when your stop loss gets hit. Okay, so a $10,000 account, 3% risk is going to be $300, right? One lot, you're only going to be able to have a 30 pip stop loss on it, right? If you're going to be doing 3% risk per trade. Makes sense? One lot, right? $10 per pip, 30 pips, $300, right? If you do two lots, 3% risk on a $10,000 account, you're only going to be able to do a 15 pip stop loss. Okay, these are just guidelines, guys. These are just guidelines. You can do your own risk management and all that. Just quick guidelines. Okay, real quick, I'm going to run them down. Okay, I don't like numbers either, but let's run them down real quick. A $10,000 account, if you take 5% risk per trade, that's $500 per trade. If you do a one lot order, you're only going to be able to have a 50 pip stop loss. Okay, if you do a two lot order, 5% risk on a $10,000 account, you're only going to be able to have a 25 pip stop loss. Okay, and now going to a little bit smaller accounts, a $1,000 account, if you do 1% risk, that's $10, right? 1% of $1,000 is $10, right? $10 risking, if you risk $10 per trade, if you do a 0.05 lot, you're going to be able to have a 20 pip stop loss. Okay, if you do a mini lot, 0.10, you're only going to be able to have a 10 pip stop loss. Okay, that's 1% risk, guys. That's 1% risk. Okay, so a 20 lot, or a 0.20 lot, I'm sorry, 20 lot. I'm already thinking 20 lots. A 0.20 lot, you're gonna have only you're gonna be able to have is 5 pip stop loss, right? Before you lose the 10 bucks, right? The 1% of your account. Okay, these are just guidelines, like I said. Write them down. Maybe you can adjust your trading. Okay, you can adjust your trading depending on your account size. Now, on a $1,000 account, now we're going a little bit higher risk. We're gonna have 3% risk. 3% is going to be $30, right, per trade. 3% risk per trade. Okay, so with a 0.05 lot, we're going to be able to have a 60 pip stop loss. Decent, right? With a 0.10 lot or a mini lot, you're going to be able to have 30 pip stop loss. Okay, and then now with a 0.20 lot, you're going to be able to have a 15 pip stop loss. Okay, that's 3% risk on a $1,000 account. So notice the lot size, guys, are very, very tiny. Okay, so if you want to be a professional trader, you're going to need to understand risk management. Okay, you need to understand it. Okay, so my personal risk, guys, I do around 3 to 5%, okay, on my account. I recommend lower than that if you're barely starting out or you're learning, okay, because you can come back from mistakes. Okay, so I would say 1 to 3% risk on your account is good. And then once you get a little bit better, 3 to 5%, okay? 3 to 5% is a good amount of risk. You don't need to really be taking more than that. Okay? If you want to open up an account for high risk and just go crazy, that's fine, but make sure you have your base account, right, that you take care of, that you don't risk too much per trade, okay? You can have a side account and go crazy on it, but your main account, you want to protect it, okay? You want to protect it. Okay, I'm moving on, guys. I'm moving on from this one. Okay, so I'm going to show you real quick a harmonic example. Okay, harmonics, you guys know I love harmonics. I'm going to show you a butterfly example right here and just showing you basically why I trade harmonics, and the reason is because their accuracy. Okay, their accuracy is crazy, guys. You need to understand that you can project from a long ways away and just basically anticipate your trade. Okay, so I anticipated this trade since before it hit this point. Okay, so I'm going to buy it up. Okay, this is a bullish butterfly. Okay, let me pull out my pen tool. Yeah, Ralph loves harmonics. All right, butterflies are so easy to see, and that's why I love them. Okay, so basically what happened, guys, on this butterfly pattern, if you guys, I don't want to get too deep into the butterfly pattern, but a butterfly pattern works because there's usually a big drive down right here, and it breaks lows, right? It breaks these lows, it extends them, gets exhausted, and then price basically pulls off of them, right? Now, I knew this pattern was valid once this B point broke, right? It made this triangle. So going back to our market formations, you guys see the symmetrical triangle here, right? See that symmetrical triangle right there? Notice what happened at the end? Scatter, right? Told you, you need to be patient and wait for the triangle towards the end before even making a move, okay? So notice at the end of the symmetrical triangle, it's scattered. It actually did a double top right here. It topped off at the 618, right? near miss on the second hit, basically made a double top, right? Before breaking, broke the trend line. Notice why trend lines are so important. 1, 2, run it through, right? The triangle trend line. Once it broke back beneath it, good to go short. I know my pattern is probably going to be completed. When it broke this B point, right, for sure, I'm like, oh man, this pattern's going to be completed soon. Just be patient. Okay, so I just waited. I waited till it kept dropping and dropping and dropping, right? And then it finally hit my reversal zone, right? My butterfly completion point, and it also broke this X point. Okay, so it also broke a low, right? So it broke this low, hit the completion point, right? So what do I expect? I expect a pop up soon. Yes, you can do that, Xavier, but the thing is, it's safer to wait till the completion. Okay. Yes, it's way better to short once the B is broken. Okay, for a butterfly pattern, you want to wait until it confirms the B breaks. Okay, you have to confirm a break of the B point before you even start projecting. Now, the safe way, guys, like look, textbook answer, like if you want to know the truth, the safest way to trade a pattern is to wait until it completes. Okay, if you start projecting and start making up patterns and they're not even complete yet, it takes a little bit more experience to understand when they're about to complete. You know what I mean? Like when it's a little bit harder to project into the future those patterns, okay, until you get more experience. Okay, if that makes sense. So it's safer to wait till it completes before you even get in. Okay, but once you get better, guys, once you get better, there's no limits. Trust me, you'll be able to catch it on this downtrend right here. Once it drops, it'll hit your take profit. You already got a buy ready. Takes off to the upside. You know what I mean? It's gonna be flawless, right? You're just gonna be flawless. Very little drawdown, right? Okay, so when I entered a buy position, what I want you to notice is that price got near it right here, right? But what I thought was gonna happen is, look, GBP USD is notorious for doing this, right? Right before it does a big move, it'll do one last spike and then take off, right? GBP loves doing this. They always do one last spike, right? Price will be chilling here, one last spike to the downside, and then take off to the upside, right? GBP loves doing that. So check it out. Let's see the next slide. Boom. My gosh. Exactly what I told you. My gosh. Look at that. Patience pays. Look, I waited. I'm like, there you are. Come to Papa, right? Come to Papa. There's a stop hunt, right? That's where the bankers got in, and that's where I got in, right? So I got in right here, guys, right around there. So I had no drawdown. This is a 4-hour chart. So it actually closed like a reversal pattern with a wick to the bottom, and I got in on the wicks. Okay, so basically no drawdown. And notice, like I told you guys, you see how GBP always does that? Like right before a big move on GBP, it'll spike real quick, and then they took off, like I told you guys. And then boom, basically the butterfly was completed. Okay, this harmonic was completed, this butterfly, and as you can see, price just took off from there. It actually kept going and going and going. It actually went all the way up, like 1,000 pips after that. Okay, so very powerful 4-hour / daily butterfly pattern. Okay, it was a beautiful trade. I made like around 5 grand off of it. Okay, I just scalped it. I scalped maybe like 100 pips off of it. I put a 5 lot. Okay, I bought right here with a 5 lot. The market went up. It spiked right here, and then I got out. Okay, it spiked right here. Why did I get out? Well, because I saw a previous high, right? A previous lower high. I knew price was going to struggle there, and it did. And it did pull back, but then it kept going. Okay, and it actually did hit my 38.2 take profit, which is around 208 pips away. I got around 80 to 100 pips off of it. Okay, I had a 5 lot guys in, so as soon as price spiked, I was like, boom, I'm out of here. Right, just wait for the pullback before even thinking about buying again. Okay, so very simple, guys. That's the butterfly pattern. Okay, next slide. I'm just showing you guys this because everything I told you to study is going to pay off. Trust me. Okay, right here we have a Gartley pattern on, I believe this was CAD CHF. Yeah, CAD CHF, Canadian dollar, Swiss franc. Okay, pretty weird pair, but this is a nice Gartley pattern. Okay, so what happened here? We have a down move. Okay, let me pull out my pen tool. Okay, so in this example, guys, we have a Gartley pattern. So we had a down move right here. Oh, let me change colors here. My bad. Let me put pinkies. Okay, so we had a big down move, a big retracement, 618. You guys know that when you have a 618 retracement, there should be alarms going off in your head, right? We're either going to get a continuation or we might get some type of harmonic pattern. Okay, so for 618, you're expecting a Gartley. Okay, so the first pattern you're going to expect is a Gartley. The next one's going to be a crab, but in this case, the 618, right, more likely to be a Gartley. Okay, in this case. Now, it made a lower high right here, hit the 786, right, of the Gartley. So this is the 618. When it breaks above it, guys, remember, for a Gartley pattern, it's the same thing like the other harmonics. Okay, it has an ABCD pattern in here. You guys see the ABCD pattern, the lightning bolt? Okay, so you see it? Up move, pull back, up move, right? Breaks this B point, right? Hits the 786, hits a trend line right here. There's a trend line in there. It's a nice retest. What happens afterwards? We're on the 1 hour chart. We have a huge wick to the top and then a big bearish close, closed all the way down here, and it actually closed below our counter trend line right here, right? This was a counter trend line, this white line right here going up. So you see how price hit the 786, multiple wicks, 3 wicks, right? And then the last wick spiked all the way up and then closed all the way down here below the counter trend line. That's an entry short, okay? Entry short, start projecting to the downside, right? Gartley pattern, basically just telling me the downtrend starting, okay, where this little drop happened, okay? So for harmonic patterns, guys, I forgot to tell you. Now, if you spot a harmonic pattern, you could put sell limits right here, right? Sell or buy limits at the completion. That's a way to avoid drawdown. Like, you'll get really good entries, but the safer way for any type of harmonic pattern is to wait for a reversal pattern to form off of it, okay, at the completion, okay, or some type of structure, right? So some type of double top. I know this one's a spike, but some type of formation, some type of reversal pattern, okay? This is a 1 hour chart just because it just happened to be the 1 hour chart, but I would probably wait for the 4 hour chart reversal pattern. Okay, just being safe. I'm just telling you guys the safe way to do it, okay? So if you want to be aggressive, whenever you spot a harmonic pattern, put your sell limits right at the completion, right? If you want to be conservative, be a little bit more careful, wait until you see rejection off of it first, okay? Next slide, before I bore you guys to death. Hopefully you guys learned something and you guys find this interesting. I mean, to me, it's like boring because I've gone over it so many times, but as long as it helps you guys, that's all that matters, okay? Now, this is, I believe, a shark pattern. Yeah, it's a shark because it broke the high right here. Okay, so let me pull out my tool. Okay, I thought this was going to be a bat pattern, but it broke the high, so it's probably a shark. Okay, so the 886 is going to be our D point, right? So I'm looking to buy off of this D point right here, off this harmonic pattern, right? I put a buy, I believe, right here when I started seeing, it looks like I started seeing bullish momentum, right? I think I put a buy in there somewhere. Okay, and then where did I put my stop loss, guys? Below the low slightly, right? Below the low slightly. Okay, that's very important, below the low slightly. Okay, so in case price comes back down like this, I'm good to go, right? Price is going to make a higher low right here. Or if it breaks the low, then my pattern's basically invalidated and my trade's wrong. Makes sense? And so basically, if it doesn't go straight to my target right here, I'm expecting a small pullback, maybe a retest of the low, and then a continuation. Okay, man, let me switch. You switch colors here, man. It's ugly. I hate when I pick the same color that's on the screen. Okay, so expect something like this, right? Maybe a pullback retest. That's the worst case scenario I expected in the situation, okay? So let's see what happened. Okay, so I bought in here somewhere, okay? I bought in here when I started seeing bullish momentum off the harmonic pattern, off my fibs, off all that, okay? So I had my confluence. Okay, let's see what happened. Price retested the low, right? Price retested the low, but my stop loss was below it, so I was safe. Okay, this is very important. Okay, so even though price retraced, right, and I was in drawdown, my stop loss was safe. Okay, I had it beneath the low a little bit. Okay, so even though price retested, what happened on the retest, guys? Check this out. Like I told you guys, right before a big move, they try to scare people or they try to trick people to go the wrong direction. What did they do? They push price down, push price down, push price down, right? We're on the 1 hour chart. They pushed it down for a couple hours. Right when it gets near the low, completion of the harmonic, right? Strong support. They wick it, right? They throw 2 wicks, a big hammer, and then they start closing above it and just complete takeoff. Okay, so what I want you to notice is, look at my target got hit beautifully right there. I called the signal on this, guys. So If you guys want to know, these are like, this is an example of one of my signals I called. So even though we had a little bit of drawdown, our stop loss was safe. I had it in a safe place, and target got hit beautifully. Just tapped our take profit, just beautifully. Okay, it was actually a quarter point. So if you guys want to know why I took profits, I had a quarter point right there. This is USD JPY. Okay, that's why I had my take profits right there near this area. Okay, I always think ahead, guys. I'm always ahead. Okay, I'm always thinking ahead. Okay, and I also want you to notice before I move on from this screenshot. Okay, there's a lot of nuggets in here in this little screenshot. Okay, you see that triangle type formation right here? Right, bottomed out right here, lower highs, descending triangle type formation, and then just took off, right? So that's an interesting little tidbit right here. When it broke it, right, when it broke that counter trend line right here, good to go for the next target. Makes sense? So everything comes together, guys. Notice the higher lows right here, higher lows. So yeah, would you have waited to enter once the support was retested? Are you talking about this double bottom right here? Right, if you didn't get in here somewhere, you're talking about waiting for this? Yes, at the double bottom. Yes. If you missed the entry, right, all that matters for your entry, guys, is that since I was trading off the harmonic pattern, right, this shark pattern, all that's important for this pattern is that you get near an entry near the price reversal zone. Okay, anywhere near this zone, anytime you see price basically show you rejection off of it, that's where you're going to look for entries. Okay, so sometimes price doesn't do a double bottom, so sometimes you can't wait for the double bottom. Okay, sometimes you need to get in right when it touches the zone. Okay, so the best entries in this case, were right when it touches the zone. Okay, a buy limit right there or a buy entry manually, right? It's hard to catch these guys manually unless you're in front of the screen. So if you spot a harmonic pattern, just practice on demo and just put a buy limit or sell limit on it at the completion. Okay. And actually, I see it looks like a smaller harmonic in there, but could be nothing. But maybe a little cipher or something. Who knows? But something in there, a little retest of the low. Okay, now let me move on to the next slide. Let's see what we got next. Yeah, glad you understood. Okay, so this is basically forecasting. Okay, you don't need much, guys. Okay, I'm going to show you some of my forecasts that you don't need much on your charts. Okay, you don't need crazy harmonics or crazy patterns or anything like that. Okay, very simple quarter points right here. In this case, I'm using quarter points. Okay, so I noticed that price had been bearish. It actually closed below. It broke a support right here. It actually retested it. Big wick, big clue. There's a big bearish candle right here. Okay, so price was dropping and it actually hit a quarter point right there. So it was right at a quarter point, right at a quarter point. So what do you guys think happened right here? What do you think is going to happen when it breaks through? What do you think is going to happen? A retest, chill here, and then break, right? The trend line, this trend line right here is acting as our guide, right? This little trend line going through right here is basically acting as our guide. Okay, when price breaks it, we confirm that it's going short to the next quarter point. Okay, you guys understand? Price is going to chill near this quarter point. This one right here, I expect it to go to the next one, right? Simple projections, right? Simple projections, just basically using trend lines, a little bit of fibs, and some quarters theory, right? Very simple stuff. Let's see what happened. Boom, my gosh, look at that accuracy. So price broke the quarter point, came back up to retest. There's the double top, just like I told you, the formations. Remember what I told you, right? Everything I told you is in the market, guys. I'm not making anything up. This is all in the market. Okay, so you get a double top type structure right here. You guys see it? Hit the trend line, right? Make a higher low, retest the highs, make a lower high, and then you actually get a reversal pattern right here. You guys see the reversal pattern? And not only that, it double topped right at a quarter point. There's your clue. There's your entry short on the reversal pattern, double top, right when it closed. Okay, this is a daily chart. Right when it's closing near that trend line, good to go short. Makes sense? Target, next quarter point, what happens? Price struggles near this quarter point. See how simple it is, guys? See, so simple, right? So simple. Once you break it down like this, the market's going to be a lot easier, okay? Okay, next harmonic I have here. It was a bat pattern, guys, because even though it broke the low right here to make a shark on the time frame higher, the 4 hour chart, it had a big wick right here. Okay, so that's why I counted it as a bat pattern. Okay, so it had a big wick right here, but pretty much closed above the 886. Okay, it closed above the 886, so it was something like this on the 4 hour chart. Okay, this is an hour chart. So this was a bat pattern, guys. Okay, so 50%. Whenever you see a 50% retracement, always think bat or shark. Okay, so if you guys want to see it, we have a big down move, price retraced, hit the 50%, alarms go off, right? When it rejects off the 50%, alarms going off in my head already. As long as price does not break this low or make a double bottom near it, right? When it makes a double bottom near it and I see the 50% and then it starts climbing again, I'm expecting a harmonic pattern, right? When it breaks the 50% B point right here, started breaking it, I start projecting, boom, harmonic is probably going to complete. Okay, harmonic is probably going to complete. I know it's kind of messy, but just understand that this was my price reversal zone, right? That blue box. Okay, this is why I'm showing you these harmonics, guys, because these are trades I take, and this is basically how I trade. Okay, so that's basically, I'm showing you why I do it and the accuracy of them. Okay, so let's see what happened afterwards. There you go. There you go. Okay, price dropped off beautifully. Okay, entries were right in the box. Okay, that's the aggressive entry. The conservative entry would have been when you see that big bearish candle right there. Okay, that reversed off of it, off the zone. When you see that big reversal candle, right? That's when you can start looking to short. Ralphie pulls back, retests the trend line, right? You saw that trend line. Change colors here, pinkies. Change color to pinky. Okay, so you see this trend line going up right here, right? So it broke beneath it, came back up to retest. There's your entry, so it's short. Okay, if you didn't get in on that reversal pattern, you can wait for a little pullback. Okay, so shorts anywhere in there. You would have had your take profits. Okay, so your take profits, you guys already know how to do them for harmonic patterns. Okay, so it's A to D. Okay, A to D or C to D, right? Depending on the pattern. But I would have done my take profits. You pull out your fib. Okay, it hit the 618. I think the 618 is like here. 382 was right here somewhere. Okay, so take profits got hit. And then it actually formed a head and shoulders right here, which I'm going to show you in the next slide. And then it actually took off to the upside. Okay, so a little bit more advanced stuff, guys. I'm going to talk about it more in my new training, but I talk about it in Forever Blue, is whenever there's a harmonic pattern and it hits your take profits, you can also look to go back into the original trend, right? This way. Makes sense? So the harmonic formed, price corrected, right? It corrected. It did react to the harmonic, right? It did flow with the harmonic, but it hits a certain fib number, 618, 786, right? One of those take profits, the 382 or the 618, hits the 618 and then just takes off from there. Okay, so I expect a head and shoulders right here. Let's see what happens. Probably within a few weeks, bro. I'm almost done with it. I'm almost done. Okay, it's probably like 85% done. Okay, well, whoops, let me erase my drawings. Okay, so what happened, guys? This is the same chart, guys. You see the bat right here? Okay, this is the bat we're looking at, right, on the previous screenshot. What happened afterwards? You see that head and shoulders right there? Head and shoulders. And we took off to the upside. And then what happened when it took off to the upside? What was happening with price? It was completing another pattern, a shark, right? It was completing a shark pattern. Okay, so what happened as soon as price touched this price reversal zone on this shark pattern? What happened? Collapse, right? Collapse. Look at that. That entry was clutch. Don't worry, bro. It's recorded. I'm about to stop though. It went on longer than I expected. Okay, but you guys see how a harmonic completion, price corrected, and then it completed another harmonic. Okay, so there's going to be harmonics within harmonics. Okay, but you need to understand all the basics and all that before you get into this crazy stuff. Okay, so I'm going to move on to the next slide. That was just a crazy harmonic I saw. Okay, this is a Gartley pattern. Okay, so this one played out nicely, hit take profits. Okay, so for a Gartley pattern, like I told you guys, 618, right? You see a big up move. You see a big pullback, hits the 618, bounces, right? And then breaks it again. Expect the 786 to get hit, and it did get hit. Yep, harmonics don't look that bad again. Yeah, it's not that hard. It's not that hard once you know them. Okay, so I called this signal in the trade room as well. So this is an old signal. This is a few months ago. That was a nice signal. Okay, nice signal, like 100 pips, I think. Nice trade. Okay, but that's a Gartley pattern. How did I know it was going to complete? I shorted. Oh, I shorted the completion. Okay, so this, going back to the earlier question, is can you trade the before it completes? Yes, you can. But notice I waited to trade it, right? I put a counter trend line right here, and I waited for that break before I took the entry, right? Or right, I took the entry right when it was breaking. Makes sense? Notice I'm not just taking the entry just based off the pattern itself. I'm waiting for that counter trend line to get near broken or breaking and then enter. Okay, so always have multiple reasons that you're entering. Okay, so this, my bias was short based off the Gartley pattern, but then once it broke my trend line, my gosh, short, short, short. Okay, next. I already went on longer than I expected, guys. It's been an hour and a half, so I'm probably not going to go into real charts, but let's finish off. That's it. Okay, that's it. Let me go back. Let's go back. Okay, go back. So I hope you guys enjoyed it. I hope you guys took notes. So let me go back. A webcammy. Oh no, you're gonna see me. No, just kidding. I'll do another one next week, Nicholas. I'll try to do one Thursday or Friday, bro. I like doing them Thursday or Fridays. Okay, I hope you guys enjoyed it. It took a lot longer than I expected, guys, so super sorry. I wanted to go into charts, but it's been an hour and a half, okay, and I'm recording as well. Yeah, I hope you guys took notes. Okay, I hope you guys took notes. What I'm gonna do is probably upload this on my Facebook, on YouTube, and inside the group. Okay, so you guys can rewatch it. Okay, that's what you guys need to study. Okay, so I hope you took notes. That's exactly what you need to study. There's nothing more. There's no secret indicator. There's no secret software that I'm gonna sell you guys. Okay, there's nothing I'm gonna, you know what I mean? There's no secrets, guys. This is what you need to learn to trade properly. Okay, so that's it. That's it. It's recorded. It'll be up right now in a little bit, a few hours. It'll be up. Thank you, guys. Auto Trader. I'm looking forward to the new site rather than Christmas. Bro. Don't worry, guys. I'm gonna put the recording on Facebook, okay? On Facebook and my YouTube channel probably, okay? So you guys can watch it without logging into the website. So don't worry about that. It's almost done. It's almost done. Okay, I don't want to show it because then it's gonna give away a lot of stuff, but it's almost done. It's about 75 to 85% done. Okay. It's just plug and play now. The site's done. All I need to do is just do a couple more videos and finish it up, and that's it. Okay. Love you guys. Okay. I've been on here for a while. Hope you guys enjoyed the webinar. Little quick presentation. Okay. Little quick presentation. Maybe I'll even upload the PowerPoint. Would you guys like the PowerPoint file so you guys can review it? Okay, sweet. Sweet, sweet, sweet. Okay, let me save it and I'll upload that as well. Okay, so I'll upload the video along with the PowerPoint presentation. Okay, and study it. That's all you're gonna need, guys. No secret stuff. That's all you're gonna need. Is all this. It's all included in this PowerPoint. Okay. Love you guys. Peace out. Till next time. Okay, next week we'll have another webinar. Okay, guys. Peace. Peace out. Recording will be up.